All right, guys, welcome to our YouTube channel where we are focused on raising capital, investing with purpose. So whether you are a new investor, an existing investor, or well, not existing, but experienced investor, or even looking to buy a business with private capital, understanding the art of raising capital is super crucial in today's competitive landscape. Join us as we navigate the complex realm of attracting investors, securing funding, and building meaningful relationships that fuel your business growth. Welcome, guys, to another episode with us. My name is Kalisha, and I have my co-host with me, Betsy. What's up? What's up? What's up? Man.
Hey, we are so happy to be here. We're very excited. This is an episode that you guys will love, but it's also very special because this is going to be a little sneak peek, as to
Yes.
say, of something that we're planning on the future. So I'm really, really excited about this. I'm excited for you guys to learn and get questions and just, get
Yes,
questions
for
and
me,
get.
definitely beneficial. I think it's going to be one of those episodes that you will have follow-up questions with. But before we even dive in and give you guys more information about what we're going to talk about, let's share our disclaimer.
Yes, the following information is for educational purposes only. Please do your own due diligence. We do not provide financial, legal, or professional advice. Everything that we talk about is from our experience. If you guys, every case is different. I have even seen CPAs and stuff tell you, like, hey, like, you need to tell me what
Mhm.
your case is, and then I can tell you what that would look like because it's different, right? So definitely get with those people.
Yeah, no, definitely. So the guests that we have here today, they will, as you guys know, we're in the space, in the real estate space. We have conversations with borrowers, we are investors, we have conversation with private money lenders. So today we have a CPA with us who will guide us on things that we need to look out for, be mindful of. And so let's welcome Kathy Corlin. Hello,
Hi,
so happy to have you here.
thanks. I'm happy to be here. Thanks for inviting me today.
No, this would be good. Kathy is about to drop a ton of knowledge. So if you guys are driving, yeah, you're gonna have to like pay keen attention. If you're watching, feel free to like rewind and be like, wait, what did she say? Like, I didn't get that. So Kathy, basically what we're focused on our channel is that we try to educate persons or just provide some form of value because we work with a lot of private money lenders who are doing short-term lending, long-term lending, borrowers who are borrowing these funds as well. But not a lot of persons talk about when it comes on to taxes, what should they look out for? But before we even dive in, just give us a little bit background of your experience.
So I have been in the tax industry now 16 years.
Mhm.
I had my own company now about 6 years. And my company is Elite Tax and Business Services. I'm an enrolled agent. I'm actually federally licensed by the Department of the Treasury. The Department of the Treasury is also the one who licenses the IRS.
Mhm.
I am also a graduate of the National Tax Practice Institute, which is like a degree in representation with the IRS. I'm also a graduate of um, the the American Institute of Certified Tax Planners,
Okay.
which has an emphasis in real estate. I am a real estate expert. I do about 50 to 70 hours of education every year in real estate. So my practice actually specializes in real estate. All my clients that come on board now are all real estate. Some are just landlords, or flippers, realtors. So to be in my practice, you actually have to be somewhere in the real estate industry. You have to be a hard money lender, PML, HML, anything like that, anything in the real estate industry to be
That's perfect. The fact that
so.
you specialize in that makes it's like so much more easier. One thing we've learned when you just get into the real estate, and everyone's like, when you're building your team, get a CPA. And they always emphasize get a CPA that has expertise in real estate. So at least you can benefit from that.
It
So,
makes a difference. The difference is that I can sit here and I can do a tax return for anybody in any industry in general. You bring me your documents, and I can copy the information into my tax software, and I can do a tax return. But the more knowledge you have in one industry, the more specified education, the more knowledge you have from the tax regulations, the more you study in one place, the more intimate you know the industry, the more you practice. You know, I have a real estate license. So with my state, I have a real estate license in Missouri. I had a real estate license in California. I'm intimately familiar with how the real estate buying process works for real estate. You know, I'm intimately familiar with the creative process for creative real estate, like buying real estate subject to or novations. I'm familiar with the buying process if you're a transaction coordinator. I actually did some transaction coordinating for other realtors.
yeah.
I'm very familiar with all the processes in buying. I'm familiar with being a landlord. I had my own real estate as a landlord. So I'm a bit involved with all the different processes.
So all of that, it really helps you to even provide like an exceptional service to your clientele, which is amazing. You mentioned as well, go ahead, Betsy.
They say that, you know, you learn more by doing it, and you're out here doing it, Kathy. Thank you.
Yeah, that's
Exactly. And I don't just offer tax services. So to be part of my practice, I'm not just someone who you come in and do just tax services with. You know, I'm going to offer the whole process. So I only have a handful of people that I offer just tax services. So, you know,
Now,
you're going to come to me because you want help with tax planning. You know, you want help with recommendations and how you're going to process what your next step is going to be. How do you plan to exit the field? You know, what do you need to do to build your business? I want you to come to me before you make your next step, because I don't want you to take that next step and fall off the cliff. I want you to take that next step and jump that cliff, not fall off that cliff.
you just said something and it hit because I've heard this many times. Always go to your CPA before making the next step. Especially your next investment that you're going to make, whether you are an investor or a lender. Let's say you have a private money lender looking to lend on a real estate asset. Maybe it's 6 months, 12 months, whatever the terms are. Can you just talk about what process you think they should take if they should come to you? Like, hey, if a lender comes to you, what documents or information should they have? And what advice do you typically give these private money lenders before they even lend on a deal?
You need to know, as a lender, you need to know what type of security you're going to have on the deal. You need to know that you're going to get that money back.
Yeah.
And as a lender, are you going to be getting, what kind of interest are you going to be getting back on that deal? Or are you going to be there's two ways you can actually lend on a deal. You could actually be getting money back as an interest on the deal, or you can be what we call joint venturing, where you actually get a percentage of the deal. So some lenders, instead of getting an interest in money back, they're actually joint venturing and getting a percentage of the deal instead of getting money back, or both. But I want, if you're going to lend on the deal, I want to know how secure is the deal.
Yeah.
Are you doing a 6-month deal? Or are you doing a 12-month deal? Are you just lending the EMD? Are you lending just the earnest money deposit that you're going to get back when escrow closes? Are you lending directly on the property? Are you going to get some type of deed until that money is paid back?
Yeah.
You know, so then, you know, how much of that are you getting? What percentage? And not only that, but once you get that percentage, how does that have to do to your bottom line? What does your profit loss already look like? Is that going to put you into a new tax bracket? Once
Tell
you
us
get that money back, how does that happen? What does that do to you? Do we need to then look at your tax bracket and say, hey, you know, what do we need to look at something else to do in order to bring your profits down another way?
You just brought up something I've never thought about that with the tax bracket. I don't think a lot of persons consider that.
Yeah.
But how would they know what tax bracket? Because I don't think persons even know that. But how would they know what tax bracket they fall into, or how to keep track of it and know? Okay, I think I'm close to my mark. Before I do anything, I need to talk to my CPA. How would they know what tax bracket they fall into?
So you can Google online and you can there are charts, but the way to do that is to do proper bookkeeping.
Yeah.
My biggest pet peeve is that people don't do proper bookkeeping. And I get people who come to me with a box full of receipts. And I tell them, I'd be happy to take care of your receipts. It's going to be $375 an hour. And then they take their box of receipts and come back with all added up, because they don't want to pay me $375 an hour to add receipts.
Mm-hmm.
If you would just do proper bookkeeping during the year, it's really not that hard. And hiring a bookkeeper is not that expensive. It's way cheaper to hire a bookkeeper to do the books proper as you go along than it is to hire one to fix it later.
Yeah.
I'll tell you, when I used to do a lot more bookkeeping, I would charge 10% higher to fix it than to keep it as we go along. Proper bookkeeping, not only that, but you have to know where your books are as you go along. If you want to get a loan somewhere, the bank wants your profit and loss. They want your cash flow statement. They want your balance sheet.
Yeah.
And you don't have any of that. Then you come to me and you tell me you want that, and now I have to charge you to do your bookkeeping to get to it.
Mm-hmm. Yeah.
So just keep it properly done as you go along, and you can have all that stuff done so quickly if you need it. That's my biggest peeve, is people don't do their bookkeeping. And if you do your bookkeeping properly, then you'll always know what your profit is. If you know your profit is, then you'll know where your tax bracket is. So we don't pay just one tax bracket.
Mm-hmm.
When we have our taxes, we call our standard deduction, and that's how much money you can make before you pay any tax. So it's almost $13,000 for one person right now. Next year it'll be closer to almost $13,000. That's how much you can earn before you pay any tax.
Mm-hmm.
Then the next $10,000 is you pay 10% on. And then the numbers will change probably next year. And about the next $10,000 or $15,000, you pay like 14%.
Mm-hmm.
And then like the next $20,000, $30,000, $40,000, you pay the next percent on. You know, then when you get into like 500,000, you pay 35%. You know, and so you're paying percentages on different increments of income.
Mm-hmm.
So you're not paying, you know, if you're in 500,000, you're not paying 35% on your whole income. It's in bits and pieces.
Yeah.
So we average it up and we call it, you know, your effective income rate. We average it. But there isn't 1% that's when we say your bracket, it's really your top bracket.
Mm-hmm.
It's not really all your income isn't taxed at one number, unless you're a low income, you're all in, you know, one bracket.
Mm-hmm.
The first 13,000 isn't taxed at all. No, that if you plan well, so
Mm-hmm.
if you plan really well, and depending on your income, I made $100,000 and I only paid $2,000 of tax.
Yeah.
Because most of mine was capital gains, and I'm married, so the first $80,000 is 0% capital gains.
Mm-hmm. Yeah. So now that I'm glad you brought that up too, because when it comes on to interest income, I think I've just having conversation with lenders, a lot of the interest income, they don't set aside money for taxes for that. Is there like what advice or like points would be like you would give those persons who are constantly making those interest income and they're reinvesting, like, hey, set aside the X percent for when it's time to pay taxes or anything like that, because they just think, okay, I need to make a high return on the interest, and then they forget about it when it's tax time. Then they try to figure that part out, how to offset some of those taxes.
I don't think you should be setting aside taxes. I think you should be making quarterly payments. Because if you don't do that, if you're setting it aside, then when tax time comes around, you might spend that money. All of a sudden, something happens, the car breaks down, or the water heater breaks down, and you spend that tax.
Yeah.
Something comes up, you spend that tax money. Then all of a sudden, you have this big, huge tax bill, and you don't have the money to pay it. Okay, that's okay. We can get you into a payment arrangement. That's okay. But you could have paid that.
Yeah.
If you pay your quarterly payment, then you don't have to worry about those things. Not only that, but most people are surprised. I had a 94-year-old client who did not know this, and he's been paying it every year. If you owe $1,000 or more at tax time, there is a penalty for owing too much. Not big, but you do pay a penalty for owing too much. If you owe $1,000 or more at tax time for federal, every state has their own limits. But for California, if you owe $500 or more, there's a penalty for owing too much.
Wow.
Most people don't realize that. Now, so then you owe the money, and then you owe the penalty. There's a penalty. So if you don't file, so people say, I know I'm going to owe, so I'm not going to file. And there's a penalty for not filing. There's a penalty for not paying. Well, file. I don't care if you can't pay. File, so that at least you don't get that penalty for not filing.
I learned that too.
Installment arrangement. At least always file.
I had an entity, and I didn't use the entity for an entire year. And my CPA was like, yeah, even though you haven't used the entity, you have an EIN. So if you don't file, the IRS will know that you didn't file. So he's like, even if your income is zero, you still need to file. So we still ended up filing everything. So at least the IRS have it that we filed our taxes. With all these things as well, like the fact that you mentioned that you recommend them doing a quarterly, just pay their taxes quarterly. For what about borrowers, right, who are borrowing these money from private money lenders? They are paying interest to those private money lenders. Do you recommend that they ask the lender to fill out like a W-9, or should they provide like a 1099 or something to show that I've paid X amount of interest to that person, so they have it in their record keeping?
So yeah, the lender should send a 1099. The only lenders are really supposed to be sending 1099 for interest. The borrower does not send the 1099 out. The lender that's their job to send it.
That's their job. Okay.
Yes.
And then should they send this after? So you recommend sending this after every transaction, or wait until the?
No. So 1099s by law must be sent by January 31st.
Okay.
So you just send it. You only have to send it once. But if you're trying, because the 1099 forms don't come out necessarily then. So their forms probably come out the end of, or sometime in December. So the forms aren't even ready. So it's easier just to send them all January, sometime in January. The earlier you send them, the better. You don't have to wait till January 31st, but that is the deadline for sending them. There are penalties for not sending them on time.
That's good to know.
And what if you have a deal that goes over the January 31st? Would it be up until January 31st and then file the rest?
Okay. No, so anything that is no, if it's not, you're going to send anything that you've paid out in a calendar year. So it doesn't, like, a mortgage goes over multiple years. So a lender sends you a 1099 for any interest that was paid in that calendar year. It doesn't matter if the deal goes in multiple years.
Yeah.
So it's whatever interest that you've received in that calendar year.
Okay.
January through December.
What are some of the mistakes that you see, like when you get private money lenders or just real estate investors come to you when it's any accounting questions, monthly, whether it's tax time? What are some common mistakes are you seeing?
The mistakes that I see are not reporting the rental properties that you buy with the money properly on their taxes, or not reporting them at all, not reporting the depreciation correctly. I see a lot of people not reporting depreciation at all. That's a really bad thing, because if you don't report the depreciation at all, you still have to pay the recapture tax on it when you sell it. We have ways to fix that. But those are the problems I see. I see 1099s being sent late. Now, I don't see the IRS actually penalizing people as much as they're supposed to. That's really low hanging fruit for them because the penalties aren't real high. So they haven't been spending a lot of penalties on not sending the 1099. And I don't see a lot of private money lenders actually sending the 1099s out. The big banks do, the regular banks do, but I don't see a lot of the private money lenders doing it like they're supposed to.
But
and
even,
so the borrowers forget to do it.
But even with that, isn't when the lenders forget to send those 1099, someone's paying taxes for that.
So whether you send it or not, I can still deduct it. The problem is the IRS has two computers, and the problem with the computer system for the IRS is from like the 60s. They haven't caught up. They have two computers, and all the documents the computers get, the IRS gets, goes to one computer, and all the tax returns go into another computer. And around June, the IRS runs a matching program, and they run all the tax returns and all the documents have to match. So all the documents in this computer have to match a tax return somewhere, and everything reported on the tax return has got to match a document somewhere. And if there's a mismatch, a notice is generated automatically. So if you're on the tax return saying, oh, but I got this interest from this company, there's no document over here from this company saying they sent it, well, you might get a notice. And you might not, because the IRS is not good at matching those 1099s from the tax return. If you send a 1099 and it's not on the tax return, the IRS is good at not at catching that. But if it's the other way, they may not catch it. So they will do a matching program looking to see if those 1099s are on the tax returns. And they will then, a letter is automatically spit out saying, hey, by the way, you forgot this. That's the first letter. It's a really polite one. You forgot this. Next letter says, here's a bill. Let me recompute your taxes for you. Then if you don't do that, they say, we're going to take it from your bank. Then you run out to the bank and close your account.
That's always I think the first time when I started my business, I learned some valuable lessons with tax time. And I think after that, because what really happened, we were mix and matching. Like we had fix and flip, we have rentals, and everything was being mixed. And when it was tax time, it was my bookkeeper, the CPA at that point was like, where's your bookkeeping stuff? Like, I can't figure out what goes to what because everything is jumbled in. So we ended up paying like a heavy tax amount because it wasn't separated properly. And I think after that, we're like, nope, getting a bookkeeper so everything is assigned to each property, all the expenses and stuff like that. When would you say investors should now start coordinating with their bookkeeper or even private money lenders to start getting ready for tax season?
Books should be should be done day one of business. You should be getting books day one of business. I would start checking in with your tax professional at least by mid-October.
Mm.
We have an extension season in October. October 15th is when extensions have to be done by. So you do not want to talk to your tax professional October 1st to October 15th because we don't want to talk to you. We're too busy. And on September 1 to September 15 is extensions for S Corps and partnerships. So we don't want to talk to you then either.
Yeah.
So September 1 to October 15, we're really busy.
Yeah.
So after that or before that, we're
Okay.
more than happy to talk to you. More than happy to. We want to see you.
Yeah.
We absolutely want to see you. We want to talk to you. We want to make sure things are going smoothly. If there's any problems, we want to fix them early. We want to do that. We want to see you in our office or talk to you on Zoom or something. We want to fix the problems. Because if once December 31st passes, there are very few things we can do to fix any problems. People come in, they say, on April 15th, they say, what can we do to fix this? And we say, well, for next year, we can. But for this year, here's a bill for $20,000.
Yeah.
And, when you talk about flipping and rentals, they're taxed totally different ways.
Mm-hmm.
So if you don't have that bookkeeping done properly,
Yeah.
That's really hard to separate out.
Yeah.
And I have clients who do both, and she sent me really weird documents, and she sent me 2 documents, and I sent her back 20 questions. And I actually just sent her an email back, and I said, if you don't fix your bookkeeping, that I'm dropping you next year. Yeah.
Kind of strict.
Yeah, kind of business.
So I have another person I just did 7 years for, who has 13 rental properties and a property management company and a maintenance company. So,
You need all those stuff.
I'm happy to take on landlords with, 13 rental properties. That's a good business for me to bring on. And if you can't keep your bookkeeping straight, I'd rather bring on somebody who is.
I love that. I love that you're so you're advocating so much for good bookkeeping. I think that's like where you're saying a lot of the roots of the problems come in. And if we just get that fixed, and doing our taxes would be way easier.
Yeah.
Well, not only just way easier, but you're going to know in advance where you sit financially and what your taxes are going to be, or what we can fix. There are so many things that we can institute in your business or in your life financially to help you save money. What are you doing for health insurance? Do you have do you have a W-2 job that has health insurance, or do you pay your own health insurance? What can we do for that? Do you qualify for an HSA, or can we get you an HRA and pay for health insurance? Now, this is kind of far-fetched for most people, but it's an example of a reality, and it has been tested. Let's say you have a health reimbursement account. A health reimbursement account is an account that will reimburse you for your health insurance costs, like your co-pays, medical expenses. Your business can reimburse you for those. Your business can deduct them, and they're non-taxable to you because they're a reimbursement.
Mm-hmm.
So I do a lot of water aerobics. Now, my doctor could actually give me a prescription for a pool. I could build a pool at my house. And if my doctor was actually to give me a prescription for a pool, my business could reimburse me for that pool as a medical prescription. And there was a lady who did a $40,000 pool, and she got audited because IRS thought that was kind of high for a pool. But there is no regulation on how much you can spend for that pool. And so she got $40,000 out of her business tax-free. The business got to write off $40,000 for the pool. And that's an extreme. Not everybody's going to write off a $40,000 pool.
Yeah.
But, it is a possibility. So there,
Of course.
there are things that can be done,
Yeah.
you know, and there are other ways to get money out of the accounts, out of businesses. Um, and like if you were to sell a property, maybe as a money lender, you could own property too. If you sold a property and you have capital gains, are you familiar with opportunity zones? There are parts of your county
Yeah.
that your county has set aside.
Yeah.
There are property areas that they want to improve.
Mhm.
And if you buy a property in those opportunity zones and you hold on to it for 10 years, you sell it 100% tax free.
Yeah. Yeah. There are some places here in because I'm in Tampa. There's some places in Tampa in St. Petersburg where it's all opportunity zones and they're like begging investors to invest there. And they give you, I think it's actually 10 years. 10
Yeah,
years.
you hold on to it 10 years. That's a standard for opportunity zone. Our whole waterfront is being redone and it's an opportunity zone. So if you hold on to it for 10 years,
Yeah.
100% tax-free sale.
Yeah. Yeah.
100% tax-free.
I have friends who are builders and they're literally just building, they're like building everything in an opportunity zone. They're like, if it's not in an opportunity zone, I don't want it.
I had a client who got an offer to sell a multifamily property. He thought it was a great deal. They were going to offer him $100,000 over what he bought it for. So he thought, oh, I'm going to sell that. But by the time that he was get paid taxes and recapture depreciation tax and all this stuff, he was going to walk away with $20,000. Instead, we figured out that if he donated that to charity, he can deduct it from his taxes, and it would have to go over multiple years. He was going to keep $94,000 in his pocket instead of 20 grand. It's 20 grand today or $94,000 over 6 years in his pocket. Not only that, but we started him his own nonprofit because he had a charitable purpose. We started him his own nonprofit. So he started the nonprofit. He donated to his own nonprofit.
Mhm.
Then he got his tax deduction. Then he got to use, and he got the nonprofit can sell it completely tax free. And then he got to use it for his own nonprofit purposes.
Mm.
And then the nonprofit can pay him for retirement benefits.
Kathy, thank you. Like,
Yes.
we haven't even, that's why like we have to do another episode because this is tip of everything and I so many things that you brought up is things that my CPA has taught me and books that I've read. And still a lot of persons don't know all these things because you hear CPA, you just hear this is gonna be too expensive. Get a bookkeeper, this is gonna be too expensive. But after my last issue, I was like, I'd rather spend that money and have a bookkeeper and a CPA. And you just dropped a ton of knowledge, and I just can't wait for the other episode where like because we have way more questions that this is just a
Yeah.
tip. It's like just a tip. So if you want to learn more, we're gonna do a live. We're gonna have Kathy on Money Mondays where if you guys have questions, just come on, watch us while we're live, ask us questions, come with your questions. We're gonna have more questions because for us too, this is also a learning experience as well for us and as business owners, investors, private money lenders. These are some of the things that you guys should be mindful of and not just worry about how I need to make money. Kathy, it was a pleasure having you here. I know Betsy's going to do her closeout, but it was
Yes.
amazing having you here, taking time and just sharing your experience over the years, giving us advice and tips how to operate our business and be mindful of certain things as well that we do. So it was great having you here in our podcast. Betsy, you want to take us out?
Yeah. Yeah, I wanted also to thank Kathy for taking the time out to be here. I mean, we really, really appreciate you giving this free knowledge because I know you sell it. So we really, really do appreciate you being here and providing this value to our listeners. So, whether you are looking to finance your next project, launch a new business, or expand, we hope that this episode gave you some insights, tips, and strategies so that you can start to raise capital and invest with purpose.
Yes. All right, guys.
Thank you.
Thank you. and see you next time.